Kris Krohn here with REI TV. Today we're going to talk about buying real estate, no money down, using not just somebody else's money. We call it OPM, other people's money. Today we're going to talk specifically about private money. It is out there in great abundance and it is available to you and I to transact your next deal with. All right, let's talk about private money. Now, I've done over 1,000 deals using somebody else's money, but you got to make sure you're engaged in the right kind of deal. First of all, what is private money? Well, bottom line is this is a very professional use of OPM. And when I say professional use, this means that there are men and women specifically that manage or have a fund of money, and they intentionally lend it out to get a certain ROI, a certain return. And it's not like borrowing from a bank where, in the market, sometimes you get locked in with a 3, 4, or 5, or 6% interest rate. You know, private money can cost you 8, 10, 12%. There are some out there that get into what we call hard money lending, where you can start seeing over 15, 18, 20% ROI rate of return. Now, the important thing is to know that your investment long-term is managed by cash flow. And if you don't have cash flow high enough, consummate enough to actually manage the cost of the debt, then hard money will actually not work. But if you're going to hold the house for a very short period of time, then hard money can be extraordinarily brilliant, which is why I've done it 1,000 times. We manage professionally these really awesome, tight, tiny margins, and we do real estate in volume. So let me give you a scenario of how this works. So in my company, one of the things that I do is I transact thousands of properties nationwide in the hottest markets for myself and for my clients everywhere. Well, when we go into those markets, I have a system set up where I like to risk somebody else's money, and the system is so good that it's become super dependable to me. So what I'll do is we will take some money, we will buy a home that has gone through an extensive vetting process, and that home is then going to get supplied to one of my clients. Now, the margin is big enough for me to basically manage the team to actually do this entire process. And so what that means is I can borrow the money, buy the house, fix it up, get it turnkey, sometimes even rent it out, and then actually get it presented to somebody else. It's almost like this concept of a mini flip, if you will, and I'm using someone else's money to be able to do this. Now, I also have my own fund that I manage, which is also a conglomerate of a bunch of other people's money, and we leverage our own money internally in how we do this. You could, for example, this is just a little bonus for just fun, okay? You might be able to get a loan against your 401k, and you could use it as a bank. Or maybe you've invested into a life insurance policy where you put money in and you can borrow against it at like a 1% arbitrage, meaning that if you make 6% a year on it, you can borrow it at 7%. It only costs you a net 1%. And all of a sudden, your life insurance policy becomes your bank. Your 401k becomes your bank. Or I have my professional hard money or private money where they're the bank. Often, if the deal is right, they're a lot easier to go through underwriting, meaning they're going to scrutinize a whole lot less on what it's going to take to do the deal. And the payoff is they get to charge a higher rate of return. So let's just say that I'm paying out 12% to someone for their money, but I'm managing the buying and selling of this home. And let's do a scenario where you're actually flipping a house. And let's say you get to flip this house for a $40,000 profit. If borrowing that money for a 90-day period of time ended up costing you $5,000, does that make sense over 90 days on a $40,000 gain? Well, listen, if you know your numbers and you're doing things right, it absolutely can. So this is another great no money down strategy in understanding there's a world of private money. Now, real quick, one more bonus. We got time, right? Where do you go to find private money? Every local area has its local RIA, meaning Real Estate Investors Association. They do these free luncheons, these monthly whatevers, and you'll find training happens there. You'll find that people will come and bring deals. And there are other people that have money saying, we're ready to lay money out. Who here has a good deal? That's an excellent way to find either non-savvy private money all the way up to super professional private money, just like my own events that I do where people come together, some with money, some with credit, some with deals, and together we make deals happen. So this is a fantastic strategy. I encourage you to learn a lot more about it. And that, my friend, is how you buy real estate using private money, someone else's money. Join us next Wednesday where we're going to drop you another tip on this wonderful world of real estate. And I do want to recommend hit that subscribe button so that we can notify you every time we have a new video made just for you.